It still says pre-live. Okay, now it says live. So hi everyone, welcome to today's online event. We're now officially live, but we're going to give an extra minute, maybe two, to other people to join. But don't worry, we're still going to stay inside the schedule. So yeah. Yes, we are absolutely going to be on schedule. So we're going to start in a minute. Okay, so I think we can quickly kick off. So hello everyone, once again, my name is Milan Listeš. I'm part of BE-terna group, sitting in Zagreb office, currently in Split. And I'll be co-host for today's event, but you will mostly see me in our panel discussion. I'm going to lead a discussion with our guests today and drive them through the questions. Today's agenda is opening speech, which is what is exactly happening. It's not going to be anything much more detailed than this. Our main focus today is going to be on a presentation of our colleague Marcela Vitkova from Tools for F. The topic says, look at the IFRS 17 through business glasses and what are the main implementation challenges. So yeah, I can assure you it's going to be a comprehensive overview and a comprehensive walkthrough from various aspects. And I really think you're going to enjoy it. And after that, what we are going to engage into is 20 to 30 minutes panel discussion. What it awaits us in the near future is going to be like a headline. Together with Marcela, Tomáš Žachlín from Generali Insurance Slovenia is going to join us, and Micha Pucelj, our head of our team lead for the financial services implementation in our data and AI team in BE-terna Group. Right. So, having that said, Marcela, please feel free to share a screen and unmute yourself. I'm going to go on mute and yeah, enjoy.
Okay, hello?
Yeah, all good.
Perfect. So, hello everyone. My name is Marcela Vitkova. I'm a consultant from Tools for F, and despite I'm an actuary, I also mostly focus on these business processes and the connection to the IT stuff. And this is more or less why I was chosen to discuss the speech for this one. I would like to look on the IFRS 17 not from the calculation detail, but through the business glasses and the processes and the challenges for the data. So as you know, I guess, the IFRS 17 is a new accounting standard for insurance contracts, and which is really changing the logic, what should be reported and how many details should be reported and taken into account for the annual reporting. So one thing is that there will be a new items on the balance sheet, not so significant change from the lines, but the content. So the technical provisions are going to be calculating in a different way for the present value of the cash flow, risk adjustment, and the contractual service margins. So this is the main point of the logic. So like more information for the technical provision. Then more significant changes is in the logic of the income statement. So we will not more account for the premium as we charge the premium from the clients, but we will calculate something what seems as an artificial value. This is called an insurance revenue. And this is the thing why we really have to calculate a lot of new calculations. And typically we are going to use tools that used to call IFRS 17 tools to get those information. In general, the calculations, it is not so hard on one policy, but the trouble is that we have to calculate for each policy details. So the other thing is that now we are used to have the accounting on some aggregated level, typically some segment or the portfolio or product. But now the standard is even asking for more detailed calculations and reporting. So we have to split for the portfolios as more or less as we are used now. But then we have to split to so-called cohorts. So it means each issue year should be a cohort. So we have to go like new business of one calendar year by second new business of the calendar year. Sometimes we even have to split to some groups. But I don't want to go for these details. But just to be sure, just to be aware that the number of the reporting item is doubled or tripled in this way. And where we are somehow on the track, on the date. Okay, sorry. So what is the typical existing process for insurance accounting now? So you get the data from the information system. If you are lucky, you have the data warehouses. If you are not so lucky, then you have to take it directly from these things. And typically there are some areas which are directly accounted, but there are some parts like liabilities, these IBNRs, which should be calculated by actuaries. So then the typical thing is that I get the data, I collected them in the data warehouse or in some other parts. I tell the actuaries that they have to calculate something, and then I go to the accounting, and from the accounting and data warehouses, I prepare the reporting. For the future, it is not possible to manage in such detail how it is now required to do it by the actuaries, because this is not possible to calculate it in some easy tool what we have now. So the new tools, these IFRS 17 tools, are prepared, and we have to fill those tools with the input data, like we filled the actuaries before, but now there's a special more excellent calculation. So we have to use this tool because also there is a lot of information this is needed. And we go for the accounting, and typically the reporting, it's done from the information from the tool and from the data warehouses. So now somehow these things are changing slightly in the processes, but significantly in the data amount. And just to show where we are now, like the IFRS 17 is starting from the January 2023, but the so-called balance sheet at transition date, so this is the opening for the transition period, it's now like over because it was the 1st of the January 2022. And when we have to have the first reporting, if we are on the annual reporting, it will be somewhere in the first quarter 2024. But for those companies that they have quarterly reporting, they have to go for this first interim reporting in the 2023. So just in very few months Yeah, so this is the thing. Then we are really changing to the accounting, and of course, if we have to account, it's expected that we will be able to account on from the 2023 immediately. And this is now the time when we are really trying to get prepared for all those IFRS 17 calculations. And what is necessary, the time is running to the transition, but also the time is running for our calculation, because typically all the calculation and the accounting closing date is typically something like D+10. It's what we are used to call this. So in 10 working days, you have to close your book for the after the end of the period about which you are reporting. So looking on the data and workflow, there is some kind of the simplified IFRS 17 flow. We have data and configuration prepare for the measurement. So then we put it to calculate it into the IFRS 17 tool. Then there is a needed to have an analysis, because you would like to post only the data that you know they are correct. So this is the typical like linear workflow which is possible to work now. In the real life, it is much more complicated, because usually you don't get all the data for this configuration on the same time, and then you have to somehow go for these dependencies between the data to get prepared for those kind of the measurement. What kind of the data you need to get the calculations in more or less any kind of the tool? So you have to go to your primary system to have the information of the policies. You should be able to put the policies to the required bucket, so portfolio, cohort, and insurance group type. Then you also have to be able to allocate the claims from the information from the claim system for the live measurements, non-live actuals measurement outcomes. It means that there should be calculated projections of the future cash flows. This is why we need these actuals measurements, the softwares. It could be, if you are familiar with some names, it could be the Prophet or the Rescue. This is typical example of the of such actual systems. Then also you have information from the accounting system. This is also new for us now, that we have to do the same calculation as for the direct business, also for the insurance business. Now we were just showing the portions for the what we ceded to the reinsurer and what we get from the reinsurer. But now we have to do the same calculations of the expected cash flow. This is also not typical now. And sometimes we need also manual inputs, because if we found some mistake, we have to have the possibility to change this. There's also some need for the company parameters. Mostly, if you are part of the bigger group, then you have to be also in line with some requirements to be able to consolidate those informations. And then it's necessary to run the tool, hope that you get a result. And if you get the results, then you have to get the outputs. And the typical output is you need the data to the accounting system. Then you need the actual result details for the checking of the data and for further analysis, mostly also the management reporting and kind of such tasks. Then you also need some data for the presentation tool, because you need to prepare the reporting table for your annual reports, and you also need to produce the management reporting about the portfolio. And then you need kind of the data export for example, for the group reporting, because the group should also consolidate. And typically it's linked to the external data warehouse, this tool, to be able to provide data, to load the data, and to transfer the data which is needed for the next period. So this is a view from the business point of view, what it's behind the data. If we look on it from kind of the more IT typical areas, so we have the IFRS 17 tool, which has some internal databases, and this database we have to fill in. So we go for these sources. We typically have this core system, data warehouses. We could have Excel, CSV, or other kind of the applications. And then we have the staging areas. The staging area for data harmonization, data quality and validation checking, and actual system integration. And we have output area, where is the measurement value for the posting and analytical data mart for those like quick check if you could go farther in your process, because all this, as it is an accounting thing, and the accounting it's under the auditors, you have to have the good data governance with the audit trail and history trace and things like that. And once you have the results, then you should be able to load the data to the accounting, to the general ledger, and also to some kind of the business intelligence platform, as I mentioned, for the management reporting and for preparations for the annual reports, and for the data warehouse, because you need to have the information in the data warehouse for the future and for other kind of the managements of the portfolio. So the thing on the market now is that we have a different kind of the tool, and so it means the more sophisticated tool you have, in the less work you could have on your own adaptations to the company, or the adaptation could be done just in one very exhaustive process, but then it will be simple and everything will work. So it is like if all these areas are together, if this is staging area, IFRS 17 tool and output area are somehow synchronized, then the situation could be easier to implement the IFRS 17 process. But if you have a kind of the tool that is covering not everything, like maybe just the staging area, maybe just the output area, but what is also typical, there is just the pure tool, the more you need to prepare on your data. So this is also one of the things that you have to talk about this within the company, what kind of the tool you have, because now I expect that most of the company had some kind of the tool chosen, and what is then necessary on those data flows to get prepared, to be really prepared for the real-time accounting. So the data needed for IFRS 17 measurements are more or less typical like other categories. So we have the system parameters, company parameters. Then this is maybe something new. We have the expected cash flows. This is not needed now in actual accounting. Then we have actual cash flows. This is typical what we have now in our accounting. And then we have some specific technical things like the discounting rates and kind of the coverage units. This is not necessary to understand the details of these the last two. But what is really important is that what we need is the expected cash flows and the actual cash flows, what it means and where it comes from. So there are like kind of the cash flow categories. These cash flow categories, if you go for these actual cash flows, you could see this is something what is now very typical for the companies, and we are used to this. So we have the premiums, claims, direct acquisition cost, fulfillment expenses, and things like that. So one of the source is that you could go for the system from the accounting, and you get these information for the actual period. I call the period T, between T and T+1. As I said, we also need the expected cash flows between the period T and T+1. This is the opening IFRS 17 positions, and we typically get these information from the previous calculations. Yeah, and then we have a third kind of the sources for this are the estimates at the end of the period, and this is the estimates of the cash flows for the futures. So for period T+1 till the end of the policies, And those estimates are produced by the actuarial system, as I said, Prophet or Rescues or things like that. So actuaries are responsible to run the actuarial systems. Accountants are responsible to have the good accounting items for all these categories. And then we need something to store the outputs from the previous calculations, because it's also needed for the next calculation. So there are such kind of the dependency in the process, which make the process even more challenging for the real life. So now you see there is a lot of input, but to get and imagine how much is this inputs like in the kind of the what I will call cells, is that, as I mentioned, we have to go for more detailed information. So we have typically a portfolio in IFRS 17 words. Unfortunately, the portfolio has a different meaning than we are used to have now. So this is not just portfolio life and non-life, but this is the specific kind of the same risk gathered together. So the number of the portfolio are typically higher. I could see that like a medium company typically has about 10 portfolios. Cohorts, as I said, you need each year of the new business or the policies issued within 1 year should be grouped together and calculated, or could be grouped together and calculated. So typically, I guess that the life companies could have like more than 15. The non-life could have like maybe 2, 3 cohorts just open. But also till they have the open claims, they also need to have it on the cohorts level, on the cohorts detail. So typically, I for the calculation choose some average 15 cohorts. Then I have to model expected cash flow items. So at least it's typically 10, between 10 to 20. Of course, it depends how deep you would like to go for your calculations, for your reporting, mostly the management reporting and for those analysis. So the deeper you would like to go, the more items you have. But between 10 to 20, it's a very typical that you really need those. This is like kind of the minimum. And then also you have to take into account the period of the projections of like the policy duration. Typically, it's up to 60 years. Yeah, for smaller company, non-life could be just 10. For big life company, it doesn't matter. It's big or small. It's 40 or 60 years. And of course, then it's also the frequency of the projection. So this is a difference if you project your expected cash flow on yearly basis. So then you have just for next year, for each next year, just one item. But if you go for the projection on a monthly basis, which is somehow typical for the actual systems, then you have 12 items for each category each next year. So if I put all together, then you see that we are ending more than 2 million for the cells in our calculation. And this is just for the expected cash flow. So this is the thing why we are saying that we have a lot of data to be managed. Okay. So data and configuration. So what is really needed? You need to prepare input data from internal sources. So as much data as you show. As I show, data quality check. It's necessary because it should be auditable. It should be precise and should be in line with the expectation. You should be able to somehow edit make the manual corrections of the data and audit within your process. Otherwise, you are not able to really finalize your accounting. And then you should be able to import the data to the tools, yeah, according to the logic of the tool. Then the measurement is run, and then before you go for the accounting, you need to have some kind of the analysis. So you need to have some good repository of the calculation results. You need application reports, typically a set of standard reports with predefined format. You could imagine that you would like to see the statement of financial positions, income statement, kind of reconciliation. the actuaries or controllers would like to have the graphical presentations of the results to see immediately if there are some troubles or not. Then the granularity of the output. So if you are looking on the results on the portfolio level and you see some mistakes, then you would like to drill into details to be able to see from where is the trouble. And typically, although you need to export to the Excel format to do some deeper analysis, which are not predefined, and also the export for semi-automated result checks, because you need to do everything very quickly. And so, if you have some tool prepared also for those checking, it's very helpful to speed up the process. Once you put once you said that everything is okay, then you go for accounting, and for the accounting you need to have the automatic generation of accounting entries, so the postings. And for this, it's also necessary to have the chart of account, which is different company by company. And of course, you need the full control of the accounting workflow, the account for the correct one. You have the corrections, reversals, and things like that. So, and what are the most implementation challenges from my point of view? I think that now it seems that the IFRS tool, it's the heart of the solution, but I see this is just one part, and the company-specific adaptations to the existing system components may represent a significant part of the IFRS 17 implementation project. And this is exactly what I see with my clients. So they were now focusing, like, first they were saying actuaries have to calculate it, then they recognize that accountants has to go to the discussions, and now when they try to dry run, they are really surprised they don't have the data. So now they are really like excited that they need to discuss with the IT guys and get prepared the data. This is also challenging to design the workflow process to support the necessary steps for running the IFRS 17 reporting process on a business as usual basis, and to catch closing deadlines. D+10, it's more or less typical. Some small companies within the big groups have even D+7. So it's really challenging to get this information just in seven working days. And of course, to get everything ready, you need to address the methodology requirements in all areas, the data preparations, IFRS 17 calculations, and the accountings and reporting. Then this is also necessary for the data flow, because once you don't have the good business definitions of the data content, then you will never get the correct data. Yeah, and then also you need the management of the end-to-end process workflow. So this is about the process, and from the IT, of what we are discussing today is also this need to manage the significant data flow. What is needed to have the smooth flow of the data and smooth integration into the existing system, and flexible aggregations of the levels in the IFRS 17, and very good internal databases that enables deep analysis and robust reporting. Just once more, remember how much I calculated for the expected cash flows for the IFRS 17, so over 2 million. And we need to add the actual cash flow for the IFRS 17. This doesn't seem too significant. If I take this 10 portfolio, 15 cohorts, and about 10 to 20 cash flow items, this is what I need, like 3,000. But so the amount is not so significant. But what is there challenging is that we have to take it from many underlying systems like accounting, data warehouse, claims management, and in the right segmentations, because this will be compared with the expected cash flows for the period. So then, when I'm lucky and put everything correctly to the tool, then I should get the output, and the output is more or less all the expected cash flows, because I need them for the next period. Then I need to IFRS 17 value items, the metrics that are used for the IFRS 17. Those are about 150 for one segment, so I have to double with the segments with 10 times 15, so it's about 22,000. And I also need the accounting entries. Typically, the entries for the accounting are not done on the granularity of the IFRS values items. So I typically go for just for the portfolios, take this 150 and I need the double entries. So it's about, so this is more or less my final number of the cells of data which I need as a result for one calculation run, and I have to work with this. So this is more or less just to highlight from my slide before that I would like to say that it's really necessary to have this smooth flow, smooth integration into the existing system, and very good internal databases, which enables deep analysis and robust reporting. So if you have any questions now before we open the panel discussion for this presentation, you could ask, or we could go to continue on the agenda.
Yeah, absolutely. Marcela, thanks a lot. If there are any questions, absolutely feel free to join, since we are just a couple of minutes ahead of time, so well planned. If not, then we are going to jump over to a panel discussion, which I think is really going to be good, because you're going to see a perspective from a couple of sides, and I hope you'll find it useful, so to say. So together with Marcela, as I already mentioned, Tomáš Žachlín from Generali is going to join us. He's in a role of data governance officer, but will probably maybe explain a little bit more on his own. And also Micha, team leader for our financial services with the data and AI in BE-terna. So since Marcela already opened a discussion, maybe I would kindly ask Tomáš and then Micha just to introduce themselves in a sentence or two.
Hi, I'm Tomáš Žachlín. I'm from Generali, and I'm working in IFRS 17 project. Now we are implementing dry run wave 1, so we are actually testing the solution, and I'm quite deeply involved with this project. And when I saw the presentation of Marcela, it was very familiar, and it was like I would preparing myself with slight differences, but otherwise it is really something what we are working on it, and it is, I must say that it is really tough job, at least from my side, to fulfill all those requirements.
Yeah, absolutely. Thanks for this introduction. Micha?
Hello, my name is Micha Pucel. I'm working here in BE-terna, and I'm a team lead of FinTech data analytics team. I've been working with data for 12, 14 years, mostly developing integration processes and analysis applications for FinTech company, mostly, of course, for insurance companies. So we are kind of specialized to deal with a larger amount of data and to get and analyze this data as efficient as possible. So yeah.
Great. Thanks a lot for this. Yeah, we can kick off with the first round of questions. I framed them like business challenges, but I think all of them are pretty generic. So maybe Marcela, I saw you had on one slide the time frame and where we currently are, and you shared it with us. But if you could just go a little more into details in terms of what's ahead of us in the next couple of months, at least how you see it, where are companies currently in average, and what should be their next steps. Sorry, you're on mute.
So I have mostly the information from the area of the Czech Republic, Slovak, Hungary, and these we call ex-Yugoslavia. I hope you don't hate this term. So now the companies are mostly doing these dry runs. That they have the tool, they try to feed the tool and get the results. To be honest, most of the company failed. I don't know how general is working in those, but even big company failed to do the first dry run. If they are going for the second dry run, it's slightly better. And what they take out is that they were firstly focused on the actuaries. As I said, I'm an actuary, but most of the actuaries are the people don't want to talk with the other guys. So they were just focusing on too detailed things, and to be precise and not to get the accounting. This is like as needed. So the companies found out the trouble between the speaking of the actuaries and accountants. It happens maybe like last year. So this discussion started. So now even the accountants are quite deeply in the process. But during the dry run, they recognized that there is a bigger problem to really get the correct data. So they found out that the systems are not prepared to get the data as precise as they needed, as correct as expected. So we get a very big experience deviation from the expected actual cash flows and the expected cash flows compared to the actual one. So this is really now that the company are like big surprise. They need the data and they need the correct data. Otherwise, they have the garbage in and garbage out. So this is more or less what I see. I don't know, Tamas, this is the same for you.
Yeah. I must add that from my experience, it was funny that now the actuarials and finance must work together with the same data. That means the same unit of accounts, and they must operate with the same business transactions. In the future, they were allowed to do some differences, and they prepared the data as they like, not as they like, but they prepared the data on their own. For example, actuaries did not use completely the same data as finance. So now they are forced to do it. And they have now in the middle also IT guys, because they are preparing the data for both of them. So it is quite challenging for all of us. Yeah.
Interesting to hear. So this is maybe a good intro for this little more generic questions that I had for Miha. So Miha, in your previous experience, who was usually the driver of these analytical requirements inside insurances? So because we obviously hear the consequence now and see what didn't go as planned. So I guess that means that usually requirements are coming from let's say some departments majorly. So what's your experience in there?
Yes, we already heard there is a lot of data and questions. So I would say that insurance companies are sitting on mountains of data. So in fact, all departments needs to have an access to their data that is up to date and of course trustworthy. So quality is important. So it's good to have all the data in one place. So for all the users or people who are analyzing data, it is important that they have appropriate data in content, scope, and solution for particular department, and of course for their level of decision maker. So data and analysis are certainly what actuaries are dealing with most deeply. They certainly always want to access all the data, all the details, and all the possible versions of the data. So probably systems often suffer from the demands. And of course, there are other departments. Of course, analysis is integral part of controlling department, sales department, sales, development, marketing. So what we're doing and seeing, I can say that we are really pleased that to see the reactions at level when we prepare application and get access to their data via some modern applications built on some modern platform like ClickSense or Power BI, which allows dynamic data analysis and data discovery. So these reactions are very, nice to see. So they're having After that, they're having data automatically refreshed on regular basis. And with that, user gain the confidence of the data. And at this point, the needs for various analysis only start to grow. So, and this has a very positive impact, not only on the decisions, but also on the quality of data, because many people are looking at data and notice anomalies, and which can be then correct immediately on daily basis. Of course, this can be achieved by setting up the ETL, ELT processes that run automatically without manual intervention, without a possibility for human errors. So people can actually then work with the data and do not have to struggle with time-consuming data retrieval. So coming back to departments, I understand that this IFRS 17 has an impact more on financial controlling and accounting side, but as we have seen, it's necessary to prepare the data from practically all the main areas for input. So.
Yeah, having that said, it's maybe even more interesting that, you know, as Marcela mentioned, you know, departments are definitely not aligned. I mean, not that it's something specific only to insurance. It's, you know, it happens in various industries that departments look in same but different data. So thanks for this, Micha. So Tomasz, moving to you. So when we speak generally about some new regulatory requirements, not necessarily this one, you know, well, do you see it as an, you know, just overhead, or you really try to understand and, let's say, use the maximum potential, you know, and implement it to your business, so to say?
This project hit us quite heavily since you know that Generalis Oranica and us merged in 2020. So we are now a merged company, and from 2020 we have now 7 core life and 2 core non-life systems. That means, of course, it is overhead because we have to consolidate all this data. And it is quite a huge effort to do it. On the other side, we still have to consolidate all the data, act on the market as one new company, prepare new products, and also we have this COVID situation. And this project also, as Marcela said before, the timelines for reporting period is getting shorter and shorter, and that means that we now in the past year we invest quite a lot in development of existing software, of data warehouse development. So yes, it is quite big overhead, but on the other side, it forced us to do this consolidation of data
properly, yeah.
Quite faster, properly. We will also have some additional data quality controls, and at the end, I think the data quality will be much better as it is now, and we will be forced to do it quicker. Otherwise, we would have focus on market, on products. Now we have to do on portfolio, on unit of accounts, and on consolidated data, yeah, and on the processes.
Okay. I mean, very fair, I would say, and honest response. So thanks for this. Okay, so moving to a next section, we can call it like technical or data challenges in general. Marcela, you already described us that from your experience where companies are now is, we can say, not yet ready, but maybe to speak optimistically about a future, do you have a feeling that it could all be, let's say, set and ready once when they get up to a production stage?
They should be.
They have to be.
But it depends when it will be. So now I think that the company are, as I said, most of the company now recognize that they really need to focus on the data. As Tamas said, that to the more underlying system to get together and to find the correct thing is the big challenge, I think, now. And also, there maybe could be a trouble that there is a lot of these IFRS 17 tools, so they are not too much familiar. So if you move from one company to the second one, so even you could be an expert in the IFRS 17, you don't know what to put in. So then you have to really go deeper to understand what is your IFRS 17 tool and what are the requirements of those things, and so also to have the specific definitions of the input data for the tool, because the data model for the tools are different, and even the different logic. So even the logic for the inputs are not the same. So it also means that there is not too many people that they understand the IFRS 17 in the way that they are able to define the data, what are the required data, and how to link them. So even if you have resources to produce the coding to get the data, it's also sometimes a trouble in the companies. You need to have the people that they are able to make the definitions. Yeah, so this is, I think this is very rare. And as it was also mentioned by Miha, that the departments are not in line. So usually the accountants and the actuaries don't understand each other, because they are used to have another terms for the same thing. And then they go to the IT, and the IT is completely confused because the people are saying something completely different from those things. So this is, I think, the biggest challenge is to really be able to define, at least to define the data. And then, as also Miha mentioned, that the actuaries are focusing to be very precise and don't look for the highest priority. So then the time when you get the data and to make these interdependencies very clearly, to see what you could calculate in advance, and you could do some kind of the scaling with very low material impact of the results, and to focus more on those things that they are really crucial for the results. This could be somehow also the reasonable way how to now avoid these the delays in the calculations. Yeah, because some people are really not going for the final calculations from the final portfolio but using these like fast closing and the scaling and things like that. So there's a lot of things what you could do also for the processes to get the data like in the good quality on time to be able to close the books.
But I guess that, you know, from the moment you started working with the companies up until now, the progress is obvious, probably, right? I mean, from where they started.
Of course, but it as I said, it depends mostly of the people within the companies. I can't say that the bigger one is quicker. Yeah, usually it's other way around. The smaller one are like more flexible to develop. Yeah, and it's also like based on the people which are in stock. So those that they are interested, they are quicker to improve.
Okay, I understand. Okay, thanks a lot for this. Miha, so you had obviously a lot of experience with various requirements in insurance companies during the years, you know, the complex ones, the less complex ones. So how complex do you see IFRS 17 challenges, you know, at least the part which is going to, let's say, come in your hands eventually? How complex do you see it? You know, is it some kind of a small to medium change request? Is it a large effort and development?
Yeah, as Marcela already showed us in the presentation, she mentioned that the IFRS 17 standard is a big, messy process, and that's why it consists of a lot of, let's say, moving parts. And of course, this itself rises the level of complexity for automation. And we know that automation process for the standard needs to be very controlled, governed, traceable. So yeah, I would say that the complexity is actually affected by the current readiness of insurance companies. I mean, the existing data setup and quality of the data. So yeah, Tomáš mentioned that, yeah, that they can have a lot of source system, and now we can question ourselves, is this today necessary to collect all the data in one place first? So we have to build warehouse or not? Of course, this has to be built automatically. of course, this is a very complex process. So maybe, or already we do have data warehouse and we just have to add missing products. This is a little bit easier. Question of quality, as I mentioned. Maybe, yeah, we can also automate certain data controls in these processes. Maybe we can question ourselves, is there traceability of the changes already available? If not, it has to be implemented. And maybe is our process for reading data in the warehouse fast enough? If not, we have to speed up in order to fulfill this X+7, X+10 days. And I would say this complexity can be solved also with the help of to unburden the existing system. And for example, we can use this today available cloud services such as Azure Synapse, or to offload the large volume uploads to the cloud. We can use some CDC data streaming technology like a click replicant and so on. These are on the input side some complex things, but on the other hand, we heard that there is an analysis of result of this IFRS 17 tool needed, and at this point we need several analytical applications which also have to be automated and be able to refresh as fast as possible. And of course, this also have to be automated. And as we heard, there are a lot of data that has to be stored and reviewed. Maybe at this place, some big data technologies might come into the place. Also, we saw that some simulations are needed, cost allocations, and so on. And those automation processes can be, of course, achieved by some modern tools like Qlik or Microsoft Platform, and we can support that. So yeah.
Okay, yeah, that's also a fair statement. You know, depending on her company's maturity. Thanks for this. Thanks for this explanation. Tomasz, coming back to you. So you already told us a little bit on your status and readiness, but I would like maybe you to go a little bit deeper. So if you could just share, you know, where you currently, are you afraid for the production?
Yeah.
Thing is, you know, did you do the things? Sorry, I wanted to say second part. Did you do majority of the things on your own, or you engaged with I don't know, external partners or consulting services?
Yeah. Okay. So as part of Generali Group, this project is centrally managed. So we are also involved in all intermediate exercises as financial impact assessment 1, 2, 3, 4. Now we have 5. Then we had dry runs 1, 2, 3. The first exercises were like gathering the system, getting to know the system properly, and so on. But this dry run wave 3, which has been implemented in Q1 this year, we also prepared the transition data. That means that we have to prepare the real data for IFRS 17, and we were able to do it. But of course, there were a lot of specific data gathering because we don't have everything consolidated yet. We still have to fine-tune a lot of processes. We still have to prepare all the details to run the processes smoothly without human interaction as less as possible. So we have still a lot of challenges to do before we will be completely ready for year-end 22. But regarding the external support or help, yes, of course, we are using and we will use all the possible help which we can get on the market. The problem or the obstacle which I see is that knowing the data, knowing the system which we are having is in-house, and the external partners can help us technically. They can help us with methodology. They can help us with some things, but they cannot help us with details of our data and how to get the data. Of course, they would also be able to do this if the time frame would be larger, but we have time only till end of this year. But we, as part of Generali Group, we are now running parallelly, so we will have to report Q1 2022 already by the new standard for Generali. So we are quite under big pressure, and we are using external help wherever we can. But we would be very glad if we could do it in larger scale.
I understand. Yeah, that's a really nice overview. Thank you for this. So coming back to a last part, maybe just quickly, so we can squeeze it in these 5 to 6 minutes. So Marcela, how do you see the post-implementation period? I mean, from your perspective, from consulting perspective, you know, is this going to be like one-off, or do you see that companies will, you know, continue to need some kind of the support from you?
From the experience with the Solvency II project, which was like in the past, and this is quite similar to this, maybe more challenging. I think that it is kind of the one-off, but this one-off, it's something like 1, maybe 2 years, even in front of us. So as Tomáš said, that first thing will be like the first dry runs for the line for these dry runs for these quarterly calculations between 2022, where the most bigger issue will be identified and will be addressed. And then some kind of the priority will be done, what it's going to be set quickly and what could be postponed. And as he said, the resources are scarce, and you know that the devils are in the details. So I think that once they go on the project to some future topics which were identified now, but will be processed in the future, I think they will still need our help. So I think that at least this I assume for maybe half a year, maybe even 1 year in ahead from today. And then I think that there will be other kind that once it's really run like on live, then you still will have a trouble. So in 2023 they will need some support to these immediate ad hoc troubles that will happen. And even now the companies knows that they for the future would like to use those IFRS 17 also for kind of the processes that they are used now to have these from the accounting, like the planning process, kind of the simulations for the ORSAs and things like that. And I think this will be somehow challenges in the next year, maybe two years in advance. So after this period, I assume that at least these two years we will get to really settle down and to be able to run the business as usual. This is my expectation.
Yeah, this is it probably could look like that, and this partially answered also a question I had for Miha. So Miha, I also assume this is going to be, even from you know, BE-terna's perspective, is going to be really tailored case by case, and probably the support is going to be needed for a longer amount of time, but maybe in a different use cases, right? I mean, what do you expect?
Yeah, yeah, I see this BE-terna here as a part of integration part, so helping up to set up automation process and integration processes needed for this IFRS 17 tools. Beside that, of course, we see our help in developing analytical applications for simulations and cost allocations. But yeah, depends on the readiness of companies. So if you have to build a warehouse, we know that's a minimum half or 1 year is a minimum to achieve some results. This is one story, and if you're talking about this smaller processes we can support for building this cost allocation application or something, in this case we can talk, yeah, in a couple of months or 2-3, depends on, yeah, size of data, readiness, and so on. So I would say, yeah, like you already mentioned, solving case by case. Yeah,
I understand. Thanks a lot. And actually wrapping up this discussion with Tomasz. So I have this question. I have no idea. Do you have a feeling, or you're ready to answer it? But I was really curious about it. So do you fear that this whole procedure might change your view on let's say profitability of some products? So, or why am I asking this? Do you have a feeling it might result in insurance companies generally speaking changing their offering to the end user in somehow, or you don't think it's going to go that far?
Well, that is more like business question than technical. But I must say that in this project we have, or actuarials have, different methodologies available, so they can choose what kind of methodology for getting to get the unit of accounts into some different type of cohorts, whether they're onerous or unonerous. It might happen that some unit of accounts might be onerous, but that does not mean that insurance companies will stop selling the products, because it might be their business decision that they will still have this product on the market. But definitely, if this will not be in the business plan as you would like to have, then these cohorts will not grow in the future. Definitely not. But who knows? It depends on the methodology, on the data, and it is more like business decision. I don't know. I cannot say. Yeah.
Okay.
Yeah.
Fair. So thanks for this. Yeah, with this having said, we are nearing the end of our discussion. Actually, we are at the end of our discussion. So what I would like to do now is thank you who joined us. I hope we managed to give you some kind of the overview of the complexity of the situation, where the others are, so you don't have to feel like sad or afraid if you're behind or in front. That we also showed you, a couple of people who are engaged with the same topic, who you can probably reach in any way if you need any part of this support. So thanks a lot for your time, and of course thank you Marcela, Tomasz, and Micha for sharing your experience. I know it's not always easy to speak about personal experience and challenges, but I think you did it really nice. And I think this is the best thing that we can give to people who listen to us. Once again, huge thanks from my side. I'm also sure that the recording of this will be shared online. So yeah, for those of you who are listening, you'll probably be free to share this among your colleagues also. Thanks once again in the end. Enjoy your day, and hope to see you soon.
Thank you.
Bye-bye.